A global stock plunge rattled nerves today in the financial markets. Here in the U.S., the Dow, the NASDAQ, and the S&P all showing dramatic losses. Now, Hal Eisner is here with some advice from a financial expert. Hal?
Yeah, it was a bit of a scary day today for some investors. In fact, at one point earlier today, the Dow Jones Industrial Average dropped more than 1,200 points. This as markets took a hit around the world. Are we talking about fear or are we talking about panic?
At this point, it's clearly fear. Panic is when the market moves down 10, 20% in huge leaps.
USC professor of finance and business economics Larry Harris says it's true. The stock market has been dropping. It dropped last week a lot.
Today, it's dropped 3%. And so that's enough to ring people's bell that there's something going on. So what are they concerned about?
The USC professor thinks they're concerned about the impact on their 401ks and their portfolios, the impact on pension plans, inflation, and how large that might be in the future, and the presidential election, and the perceived impact of who might end up in the White House.
And so that gets them nervous about whether perhaps we're going to see a recession in the future. And if you're afraid of a recession, you figure the companies aren't going to do as well, and that might cause people to sell their stocks.
Then there's the big news in the tech sector that Warren Buffett's Berkshire Hathaway unloaded half of its Apple stock.
That's not good for Apple. What's not good for Apple is not good for tech stocks. What's not good for tech stocks is not good for the market as a whole.
Then there's the unemployment rate. It jumped to 4.3%, which was more than what was expected. And as more people have a tough time finding jobs, they're spending less.
So people are worried about that because it suggests that there'll be less business being done in the future.
Harris says, however, don't react impulsively.
Acting impulsively causes people to buy when prices are high and sell when prices are low. And as you know, that's not the formula for making money.
He also says if you're in the market, sit tight before you act. Don't get overextended. Pay off credit cards if you can, and spend smartly. He also reminds us as markets go down, they also come up.
Yeah, I mean, so is the thought this is sort of a blip for a few days, or is this a trend?
He doesn't know. He says we have to just watch it for a little bit and see what happens with it. Yeah. But we already know that the Japanese market, the Nikkei market, already kind of started down. So we're all interconnected.
Yeah. It's good advice, but it's hard to take. Cooler heads to prevail, right?
Right, exactly.
Yeah. All right. Thank you so much, Hal.
Of course.